popping up. So it is always so much excitement when we can go live. And here's the funny thing though, I'm looking on here and I had updated the actual content for today. And as I'm looking here, it says easy ways to decorate your short-term rental, Dr. Zwade. So it's not quite.
I've got some decoration tips. I can help there too.
I
I decorated my
know.
office.
Yeah, exactly. I love it. It's all branded and whatnot, which is amazing. But this is not quite. Let me see. If I go to more actions, let's see what it says. More actions. I can duplicate, but can I not edit anymore? Ay, ay, ay. And it says waiting for host. So let's see. Switch to studio, edit event. It's happening now. Okay, I think we're just going to have to go with it. So for those of you who are joining us, I know it may say easy ways to decorate, but that was last week's live stream. But this week's live stream is completely different. We're talking about money. And so let's get this party started. I am just so excited to have with me today Dr. Zwade Marshall, who is the co-founder of an amazing company and product called Doc to Doc Lending. So for those of you who are following on Instagram, on LinkedIn, Facebook, YouTube, all the places, we're talking about bridge funding. So I remember, y'all, true story. I remember when Jesse and I, we graduated with like $500,000 in student loan debt. And okay, there we go. There's my video. Thank you, Dr. Zwade. All right, so I remember when Jess and I, we graduated with like $500,000 in student loan debt. No kidding, guys. It was extremely daunting, but nevertheless, we still needed a place to stay. We needed a home to be in. We needed a way to, just kind of get us over that initial hump as we're navigating life after grad school. And so for me, it was working through a program back then, the Dave Ramsey program. I actually used the debt snowball and did all the things, got out of debt. And I was like, we're going to kick debt to the curb, which was great and all until we really wanted to get into real estate investing. And I totally understand the sentiment of, buying a house with cash and totally paid off. I'm here for that if that's for you. But for me, I prefer to hold on to some of my cash as much as possible. And so to get some of these projects off the ground, we wanted to have, a nice little bucket or a little treasure chest of cash reserves, just in case something were to happen. And so having a product like Doc to Doc Lending would have been so handy. And so you all know that I love to bring you all the goods, whether it's information or products or resources or experts and individuals who have something to offer that I have leveraged myself or I wish I had access to back in the day, and I wish I had leveraged. I'm always looking for a way to help our community to win. And members of our community who've already reached out to Doc to Doc, they have already stated to us that it's been such a seamless and easy process. And so this isn't for everyone. I know our community has a combination of doctors, dentists, pharmacists, engineers, nurses, just a bunch of amazing, hardworking individuals. But Dr. Doc, they specialize specifically in working with physicians, those that are coming out of training, as well as dentists, because there's a very nuanced trajectory to that career arc. And so they want to make sure that they could serve them at the highest level possible. And so it's all about, really being specific and niche and specializing. I'm all for that. So without further ado, I would love, Dr. Zwade, for you to introduce yourself to the people and let us know a little bit about why you decided to come up with this product. What led you to recognizing the need for something like doc-to-doc lending.
Rachel, thank you for having me. And I'm thrilled to be here. Again, I'm Zwade Marshall. I'm co-founder and CEO of Doc Lending. I'm also an anesthesiologist and interventional spine specialist. I own a surgery center in 2 locations in Atlanta, not very far from where Rachel lives. And so it's just fortuitous that we happen to be neighbors in our zip codes. And I also happen to be a decorator. I can give decoration advice. If you guys missed last week's session, I'm just kidding. I have nothing to do with decor in my home or my office, but I certainly respect the folks that do. So now, as Rachel said, in all seriousness, and thank you for your personal testimony about your struggles with debt, and the company's foundation and the evolution of the why for us, my co-founder and me, and for the scores of doctors who are investors in the company, is that we all understand what it means to kind of suffer in silence. The path to a career in healthcare, whether it's pharmacy or becoming a nurse practitioner, and certainly for physicians and dentists, that journey is extraordinarily expensive and becoming even more expensive over time. And many of us are borrowing to afford the cost of medical education, and paying for your education through loans is one thing, but then there's also how do you live, right? Like, we're mortgaging the time of your life when you're building a family, you're getting married, your car's breaking down, your apartment's going to have a flood. How do you come up with the funds for the life events that will inevitably happen? What many of us do is we swipe our credit cards in silence, because there's not a whole lot of formal education within health training around financial literacy. There's maybe an exit interview or a capstone series right before graduation that talks about how to pay down your student loan debt. But there's not this kind of prospective, intentional thought process around helping us figure out how to manage finances. And so what we see at Doc are a number of our peers that are actually really struggling. And when they realize that we have an option to help fund their needs, it's a very emotional time for them. And that's a part of the joy that we have in leading the company. It's that we get to hear and to coach, to console, and in some cases to inspire them to use the funds in ways that will help to expand their horizons. My story is that I, like you, Rachel, came out of my medical training with north of $200,000 in educational debt. I had credit card debt as well. My income right after I graduated from med school was going to be $54,000 a year, and my FICO score was considered to be a subprime or a near prime FICO score. That means that you're not entitled to get uncollateralized or personal loans from many lenders, and the few that will lend to you will charge you predatory interest rates. It's like getting a credit card again, and it felt unfair to us at Doc, because we know that we're kind of victims of that temporal and temporary circumstance in our life. And we're oftentimes a lot more credit worthy than our FICO scores might predict that we are, or that debt to income ratio is telling a different story from who we actually are as people. And we lend our funds on unique doctor-specific criteria. Now, to be clear, we lend to only physicians and dentists currently. And so we care about how many years you have left in training, or how many years have you been in your practice. We care about your specialty. We care about if you're a specialist or a primary care doctor and you're board certified in your field. All factors that we use to help give you extra credit to get that rate more attractive to you. We care about your free cash after you pay your bills. What's left in your account? Do you have a savings history as well? And these things are predictors, in our opinion, to your credit worthiness and ability to repay our loans. We have no collateral for the debt. We're able to offer an approval that's conditional upon verification that happens within a matter of minutes after you apply online. And we've served thousands of doctors now, over 2,000 doctors, and issued over 78 million in loans. And our product is resonating. As your clients can attest, Rachel, our Trustpilot reviews are outstanding, because if you get approved for a loan from us, you get to speak with a doctor, with a peer on our team, who actually understands your plight. We can identify with it. We'll answer the phone and call you nights and weekends, when banks are not open to handle loans. We know that your call schedule and your shifts will oftentimes mean that your only free time to discuss the loan will be at after hours times. And so we'll meet our clients where they are, whenever they're ready. And that's a part of our value proposition to our market.
I love that. And I think that that's so unique because, as someone who's in healthcare, I remember brokering deals, with mortgage lenders, and they're on that 9 to 5 schedule, but, I may have worked 7 p.m. to 7 a.m. and I'm trying to get that last bit of sleep. And
that's right.
Just not knowing, whether or not you're going to finally get that support that you need, I think could put another layer of stress on there, because they're demanding, so many pieces of paperwork, and it's at all odd hours. And it makes me wonder, like, how are you even able to broker these deals? Because it was all over the place. So I think that's something that I didn't think about, and we take for granted, to have a company that is in lockstep and really understands what it is that we're doing in real life and working with us and working on our schedule and on our time. I think that just makes all the difference in the world. And I wanted to highlight something that you spoke about a little bit earlier. It's the suffering in silence part. I think that's important, Dr. Marshall, because a lot of times, I don't know if it's a self-limiting belief, but we feel as though we signed up for this, right? You go into medicine to suffer in silence, right? Because nobody cares. They're like, you're making all the money. We don't care that you're suffering. And so you just learn to just kind of sit down and suffer in silence. And for you to call that out and put it at the forefront and say, you don't have to suffer in silence, I think that means something. So thank you for letting that be part of your inspiration for doc-to-doc lending, because that's huge. We don't have to suffer in silence. It's not an isolated incident. This is not a drill. A lot of us have gone through this path, and so helping us navigate that, I think, is key. So
thank you for that. Yeah. I'll tell you, I mean, I appreciate the recognition for the community aspect of what we're building here, and our ability to kind of affiliate with the folks that don't have the voice to say, hey, I'm struggling financially. And I think it's partly inspired by the fact that we're used to being, type A overachievers.
Yeah.
And if we're failing at something, or if we perceive this as a failure, then it's an embarrassment for many of us. But I also think that now more than ever before, there's been a focus on physician and health practitioner wellness. There's been so much that's been published about practitioner burnout, inspired in part by COVID, and some of the trauma that we endure as health practitioners, seeing, hundreds of thousands of people get sick. Many of them die. The hours, the kind of self-reflection on our life and our life's work. For many of us, we felt reinvigorated to kind of do more. But for many others, there was this kind of existential crisis of identity and what's worth it? What risk are we willing to take? Because you're now dealing with putting yourself at risk and your family members at risk of getting sick, while pay was going down because hospitals and insurance companies didn't want to keep paying doctors and nurses and pharmacists when their revenues were down from having to close outpatient centers. So it was this kind of ugly confluence of factors that exposed a number of frailties within our world. and the stress, the toll of just the work itself, juxtaposed with the things that we don't talk about enough, like the cost of medical education, and how you're saddling folks that you want to go into primary care specialties with so much debt that it almost makes people choose more lucrative fields to be able to contemplate having to pay down debt and having a meaningful lifestyle as well. And other challenges around healthcare include the fact that we have increasing medical school class sizes, but the residency spots have not increased to keep up with the medical school slots. So you'll have folks that will graduate from med school with north of $300,000 of debt, and they have no place to go for training. And now they're saddled with debt and no training ground. So that, with the kind of financial burden, I think it's all part of the dialogue that we're intending to shed light on and let our community know that we know it, we've experienced it, and we want to be helpful in whatever ways that we can.
Oh, I love that. You have just dropped so many truth bombs, and I know there are some in the audience. I see you, Jennifer Brown. Hello, hello. For those of you who are just joining us, welcome. It's Rachel back at you again with another live podcast interview. So for those of you who are just jumping in, I know this does not look like Caitlin from design class from last week at Show Plays. This is Dr. Zwade. We're talking healthcare burnout. We're talking existential crisis, making choices, right, for ourselves. And that comes with the need for funding oftentimes, right? There's nothing like getting a little funding in your pocket to help provide some clarity of, okay, I have options, right? It shakes off some of that desperation energy. I got some options now.
Money will solve a lot of problems. Not everything.
It does. Let me tell you, when we created an extra revenue stream with real estate investing, all of a sudden we had clarity, we had options. We were like, okay, we can make some choices now. Yeah, and I love that. So with that being said, so what are some options that people would have with working with doc-to-doc learning, doc-to-doc lending, in terms of tell us a little bit about the range of loans that you may have, as well as what do some providers use the loans for?
Sure. So I'll tell you, this is a personal loan that can be used for any personal reason. So we have no limitations on use case. Anything legal is what we say, right? That being said, our rates start at 8.9% and go up to 17.9% for the interest rate. It's a 5-year term, which is a relatively long term for a personal loan to have those monthly payments be a little bit more affordable for many of our borrowers. We have, importantly for your folks to know, no prepayment penalty. So this could be a bridge. It can be a short-term loan that you get while you're waiting for your larger funding source to come through. If you're doing real estate, like many of your audience members do, and you need to get furnishings in the house that you just bought, or you need to do renovations for a flip and you're waiting for the hard money line to get approved, you can use ours as a bridge, and we don't charge you any fees for the interest that we lose if you prepay our loan at any time. And so the use cases, most often, it's credit card debt consolidation, to be honest. A lot of folks have swiped their card in a time when it's kind of hard to access capital, and they're paying, north of 25% in APR on those cards. And that revolving credit utilization suppresses their overall credit profile and hurts them. And they'll usually want to refinance that debt with our loan. We lend to a large number of folks that are established physicians or dentists that are doing real estate transactions. So it can help with the equity buy down. It can help with the cash flash. It can help with renovation costs. We're funding things like cryosite, oocyte cryopreservation for our in-training female colleagues that are in very long residencies and fellowship programs that want to preserve their fertility. That's a very expensive process, and our loans are used for that not infrequently. And so it's the life happens loan. Your car broke down, your apartment flooded, whatever it is, we're here. And a part of why this works so well for so many is because we make it easy. If you're embarrassed, you don't want to go through a lengthy application at a bank, you can apply with us online. It takes an average about 3.5 minutes. You'll have an approval within minutes, or a denial if it's going to be a denial. But you'll know right then. There's no hard credit inquiry at the time of application. Only if you decide to proceed with the loan before we disperse the funds, we check your credit report at that time. So it's meant to be a relatively frictionless process to get from thinking you need funds to just getting a quote and a rate to compare. And after you get that quote and that rate and you say, you know what, I still don't know, you get to talk to a peer. You get to get on the phone with a doctor that says, hey, maybe this is not the best use case for your loan. Here's some other resources that are out there that would be better for you than our product. We do that as well. So because our goal is just to provide value to our community, and it's not to put folks into a bad situation.
I love that. And, that was a great walkthrough. So in terms of timeline, could you walk us through that? So say we're looking to fund furnishing our short-term rental, and we're, a good fit for the product. What does that timeline look like, Dr. Zwade?
Sure. So it depends upon how quickly the applicant wants to move. If you applied for a loan now, you can, and you fit the profile to get an approval, you get approved within a matter of 3 minutes. Then we request verification documents for identity verification and income verification. If you can submit and go through our verification, and it's a very tech-enabled process of your photograph on your phone that goes to our verification partner. That can be done in a matter of minutes again. In 24 to 48 hours, we can have you verified and then prepared for dispersal of your loan amount within the next 3 to 5 business days. So today is Tuesday. You can probably get funded for your loan next Tuesday, and up to $100,000.
Wow, that's awesome. And I think that's very helpful because sometimes that is just the amount, right? Just to bridge the gap. That's why we called it a bridge loan in the email marketing as well. Bridge the gap from point A to point B, I think is very, very helpful. So guys, feel free to go ahead and drop your questions in the chat. I see we have quite a few watching on the YouTube channel, as well as the Facebook group, the Facebook page, Twitter. I see you there as well. So feel free to drop your questions in the chat. Hello. I see some hellos in here. So let me ask you this, Dr. Marshall. So as far as our listeners, what is one good piece of, I guess I would call it, I know we're not financial advisors, but what, in terms of financial advice, would you share with those who are listening today that would put them in the position, I guess the best position to connect with you once they have graduated or once they're taking the next step? Where would they be, like say 3rd year or 4th year, and they're thinking, you know what, once I graduate, I want to get into a real estate property. I know I may not have the debt to income ratio where I need to, get the big loans that I'm looking for an investment property. So what are some things that they could do in that 3rd or 4th year to start to kind of prepare them to connect with you once they graduate?
Sure. So I'll tell you that we'll serve doctors from the time they graduate medical school as a 4th year medical student that's matched to the rest of their careers. And so the uses of our funds will vary depending upon where you are in your career cycle, right? So I want to be clear that we don't target you. You don't have to prepare to meet us. We meet you wherever you are in your career arc. So if you're a 4th year med student, you likely are looking to borrow for transition costs. You're moving from Atlanta to Boston like I did, or from New York to California, and that's going to be expensive. If you're already in residency, you're likely going to be paying down credit card debt, or you're preparing for your job interviews, because a lot of jobs now are not paying. They're not flying you in for interviews and not paying you signing bonuses anymore. If you're in practice already, it could be a tax bill that came due. It could be debt consolidation. It could be equity for a real estate flip. So the use cases are innumerable. And again, we will lend for any legitimate purpose, right? Now, a couple of things I think to your question, Don, how to prepare and think about debt and borrowing. Things that I wish I'd known when I was in school is the importance of being judicious about when you borrow. So I think a lot has been said in the influencer space, particularly in medicine, that debt is bad, you know, and like you did and the resume, you pay on your student loan debt as soon as you can. Well, that could be good advice depending upon what your ethos is around debt, but it could also be bad financial advice. If your student loan interest rates are 2.5%, 3% like it used to be, and you can keep your cash and deploy it in other ways to earn more money, then it makes sense for you to just make those payments and not lump sum pay off that debt. But also, I think importantly, many in-training physicians don't understand the importance of making payments on time, the timeliness of their payments. And it could be just being busy. It could be just forgetfulness, but sloppy pays make it harder for lenders to approve your loan because the concern is that you become a delinquent or a defaulted borrower. And if you're in the personal loan space where you have no collateral, it makes it all the more challenging to see through that FICO score if the FICO score is low because of bad payment history, compared to the FICO score being low just because of immature credit, which many of us have, or from a lopsided debt to income ratio, which we know that we'll have high debt, low income early in our careers. So knowing the value of making payments on time is important. And the last thing is use of borrowed funds. There's consumption spending and there's investment spending. Think of consumption spending as just consuming goods and services. You're paying for things that you don't necessarily need, that will not be actually accretive or adding value to your overall net worth and to your overall lifestyle in a meaningful way. Whereas investment spending would be the borrowing for things that are going to actually grow your net worth, dramatically improve your quality of life. And when rates are low, the distinction between the two, folks are not you don't have to be very, very careful about it because it's cheap money. But especially in a time like now when interest rates are relatively high, it's high compared to where it was a year ago. But in the history of interest rates in the world, it's still, you know, like within a degree of normal. You need to be a lot more discerning about why you're borrowing the money and what the use of funds will be, especially if you're paying the rates that the markets are now asking for loans, both unsecured and secured loans.
I love that. That is so good. And you really dropped a whole lot of truth bombs here as well. I took notes on the consumption spending, right? Versus the investment spending, because that's a huge one. And that's a huge aha moment. And I know for a lot of individuals who are here with us who are physicians and dentists, I mean, they totally get it. But for others who are, and they're probably thinking like, cry me a river, doctors, you all have it made in the shade. But that is not the case. We have many members in our community who are actually looking to invest in real estate, for instance, Dr. Marshall, and they're waiting to partner with a relative and it's not going through. And so even having something like this would have been just an amazing resource for them as well. And so again, this is why we're bringing the goods. And so thank you for giving us the kind of the breakdown of what, your recommendation is in terms of how to start thinking about debt or how to start rewiring our brains a little bit around what that looks like. So something you touched on a little bit earlier, and I think it may have escaped some of us, especially as we're starting this journey in investing and looking at, our future endeavors. You spoke about personal versus commercial when it comes to lending sources. Could you touch base on that a little bit? Tell us, what are those two? What's the pros and cons? And which bucket, remind us which bucket that doc to doc lending falls under as well.
Sure. So think of commercial loan as a loan that's tied to a business entity. And oftentimes the application process will require tax returns for the business, the tax ID of the business, any kind of banking relationships, accounts that the business has. Folks may ask for income statements, balance sheets, one of the business assets, the business profit and loss, and trends, like do you have a lot of accounts receivable assets that people owe you money over the course of the next 60, 90, 120 days. And so that underwriting process for a commercial loan is it's a lot more intense. If it's a commercial property, there's going to be appraisals of the property, the current valuation and the taxes, etc. And at Doc to Doc, we have a commercial loan partnership program where we're able to help our doctors vet opportunities for funding sources for business use cases. And so we do handle those requests as well. Our flagship product, the one that we've become known for, is the personal loan. So unlike a commercial loan that requires business assets, this is based upon the borrower's strength as an individual. And so we're looking at the personal income, the personal credit score. It's a lot less intrusive of a process, but it does require that the individual be on the hook for repayment and not the business. So if there's a default in a commercial loan, the lender, the bank partner, whoever is lending the money, can access the business assets to recoup the funds that they loan to that borrower. On the personal loan side, there's no collateral. If that person decides to default, it hurts their credit score. But we couldn't come after your business, your house, your car, or anything like that at all. So that's the main difference. And because commercial loans have collateral, interest rates are lower generally in a normal kind of interest rate environment. With the way interest rates are right now, commercial loans can still go up to as high as high teens, 20%, depending upon the use case and industry. But you'd usually expect to see a personal loan being a little bit higher than a commercial loan, though that's no longer the case because of the current interest rate environment. So we do have both, but our personal loan product is the one that our physician investors and our doctors have put the money in the pool that we're able to lend it directly. The commercial products, we've partnered with our bank partners that offer products, and we help them to kind of understand the story for each borrower and put together a package and an offer that makes sense for that use case.
I love that. And there's definitely a difference. And to me, the big win that doc to doc lending has is, although you may have the lack of history for running a business, you wouldn't necessarily qualify for the commercial side of things, but the personal, making sure that you're mindful of what your personal profile looks like in terms of your repayment history, is going to put you in a better position to leverage a product like this. And I'm seeing a question from Tia. So Tia says, I'm sorry I joined late. If it's only for doctors, what are the requirements? And she said accountants, ? So not for accountants, Tia, but for doctors of medicine or dentists as well. This is what they have at the moment. But could you run down the requirements one more time for us, Dr. Marshall?
Sure. So I think you said it well there, Rachel. It's doctors, physicians and dentists, MDs, DOs, DDSs, DMDs, and doctors of podiatry as well. Nice. You can be a U.S. citizen, a permanent resident, a J1 visa holder, H1B, or O1 visa. So we're one of the few companies that will lend to each of those visa categories as well.
Nice.
You cannot have a history of bankruptcy. You cannot have active collections accounts or accounts in delinquency the time you apply as well. And we want you to be in practice, having an income within the practice of medicine, with an active board license, preferably.
Awesome. And you mentioned a little bit earlier, if you have your residency match, is there an opportunity to start the conversation at that point?
That's right, yes. So the earliest that you can borrow from us would be as a fourth-year medical student with a match letter in hand. So match day was March 17th of this year, this past March. So we had, 40,000 newly eligible doc members at match day. If you're a third year, you cannot borrow from us yet, but for next year you can.
That's awesome. Yeah. So thank you for going through that eligibility criteria. So guys, feel free to keep the questions coming. And I know we're going to be wrapping up in just 10 minutes or so. So regardless of that, if you're watching the replay, no worries, just keep the questions coming. And we'll have someone on the team connect with Dr. Zwade's team to make sure all of your questions are answered. So
we'd be thrilled to engage in answering questions within the group. So
awesome.
So please do ask questions even beyond this live event being done. We'll be very responsive.
Awesome. I love that because, a lot of our members, right, they're replay watchers. They're probably working tonight, but they'll catch it when they can. Sometimes Sundays, I feel like, as we get a peak, a spike in our viewership on all the replays. So that's awesome.
Yep.
So as far as we spoke a little bit about financial habits, what to be mindful of as far as applying for the loan. We spoke about eligibility criteria. What would you say is one of the biggest misconceptions that, those that are looking to get some help from you and your team, what would you say is something that they think, perhaps, I know for me, prepayment penalty is always at the forefront of my mind, but outside of that, what are some of the biggest misconceptions that you've seen and maybe you'd like to address right now?
Yeah, great question. And thank you for the opportunity to kind of address that, because I think we're often challenged by the fact that many of our audience members or our potential clients are not financially savvy. So they don't understand the terms that are out there, and they're not armed with the information to do apples to apples comparisons between loan products, right? So they'll hyper focus on interest rate because everyone wants to get the lowest rate possible. But they don't know how interest rate relates to APR, which is the true cost of the loan, inclusive of fees, right? And so knowing that, like, there's fine print around and there's metrics around a lending product that should be thought about holistically. You should think about the term of the loan. If your main problem is cash flow and having a monthly payment that's affordable each month, then the term of the loan should matter to you, because a longer term means a lower monthly payment. Even if the interest rate is 50 basis points, 0.5% higher than a shorter term loan. And the difference in monthly payment can be several hundreds of dollars if the term is 3 years, for instance, compared to 10 years, right? Or a 5-year term like our product. So knowing if it's cash, that's the premium. Knowing that if you need the loan for a bridge for a short period of time, and if there are no prepayment penalties, then the rate matters less to you, simply because you have the ability to pay it off after 3 months. And you may incur a total of $300, $400, $800 in interest payments to have access to $100,000 of capital that bridges an immediate need. So taking a step back to look at the loans more holistically and compare all the features and not just interest rate is critically important.
Oh my goodness. I feel like this is so timely. I was just having a similar conversation even inside of the community, because the interest rates that you're quoting, we're seeing similar in the mortgage space as well, right?
Yep.
And so at the end of the day, the question that I ask the members inside the community is that holistic approach is, okay, are we looking for cash flow that's going to replace the W-2, right? So that monthly cash flow, is that what we're looking for right now? Or are we looking for an overall appreciation 5 years down the line?
Right, sure.
right? So those are
Sure.
two, or are we looking to generate back our initial investment within the next 12 months? So there's cash on cash, there's cash flow, there's appreciation, there's bonus depreciation. So which one are you? My 78-year-old has a different goal
That's right.
than my 38-year-old. So
Absolutely.
no two deals are created equal.
Absolutely correct. And it takes time, right? I think we're patient with our clients because we know it's not intuitive. And if
No,
you don't have a foundational knowledge on this stuff, it doesn't come to you naturally. And
yeah.
and hence it's great that, short-term gems exists to help coach people through that. And that's why we exist as well.
Yeah.
Folks may be
I love
startled
that.
when they see a mortgage rate of 9% or 11% when they were seeing rates of 2.5%,
Ooh.
right, a year and a
Yeah.
half ago. But then if the use of funds leads to them acquiring a property that will generate rental income that is a multiple of what that mortgage payment will be on a monthly basis, then there are ways that deal makes a lot of sense. And depending upon your investment goals, it frames the context or the lens through which you view things like rate, APR, term, penalties, fees. It should all be considered with the goal of the borrower in mind at all times.
I love it. I love it. And the fact that there's no prepayment penalty, that is music to my ears. So it gives you an opportunity to have more options
That's
for
right.
sure. So Dr. Marshall, what, for the listeners who are joining, what are some new and upcoming things that are going on with Doc Working that we should be aware of in the near future? Anything new that you'd like to share?
Yeah, yes, there are several new things. We just launched, actually, the bridge loan that you're referencing is a new product that we just launched.
I love that.
That enables our transitioning residents and fellows, the folks who are now graduating from training and getting their first job, to have access to up to $50,000 of capital at similar speedy approval terms, etc. Whereas prior to them graduating, the cap would have been $25,000. So we're letting those folks who have those expenses for relocation have some extra spending bandwidth. And again, with no prepayment penalty, it means that many of them, once they get to their first job and they finish a month of work, they then get their signing bonus. They can pay us off at that time, 3, 4, 5 months from now. We launched a Dr. Law credit card that'll have an introductory 0% APR transfer fee and a very competitive reward program as well. We're looking at expanding our credit box, meaning we're looking at opportunities to increase the eligible portions of our communities that can access our product as well. And we're expanding that commercial loan base. So we're studying the applicants that come to us for commercial products, and we're developing in-house our own suite of commercial products that we will have internal to the company that we can optimize our superior customer and concierge experience and fund it with our capital as well.
Oh, I love that. So you mentioned bots a little bit earlier. Was that AI related or is that something else? Did I?
Bots, no. Well, so we do use some geofencing and tracking for our marketing campaign. So as we have affiliates and folks that we partner with, we can tell which customers came from which partner and how many came, and so we can kind of do some success planning around that as well.
Awesome. And so I love everything that you just mentioned. It seems like there's definitely a bright future with all that you all have going on to support the professionals of medicine along their financial journey. So I'm just really thrilled for that. So guys, there you have it. Again, thank you so much, Dr. Marshall. I will be sharing a link to connect with Dr. Marshall and Dr. Learning if you feel as though you are in that place where you have this specific need and that you would, qualify. Just reach out. Like I said a little bit earlier, the members of our community that have reached out, they've shared that it has been a seamless process, which I absolutely love. I love when things are We're going to live our lives with ease as much as lies within us, because it's been a rough few years. And so my goal is to make sure that I'm offering resources and connecting you all in our community with resources that can help us as we continue on this financial freedom, location freedom, time freedom journey. So any final words, Dr. Marshall, before we close out for tonight?
Thank you so much for having me. I'm a huge fan of what you're doing. I too am investing in my own personal real estate portfolio. And so I get the value of having someone to kind of shepherd you through all the different things you have to think about listing a rental property and financing it as well. And so thanks for your work, and know that we're here to support any of your docs that are looking for capital for a project, or for just any personal reason. And so it's been a pleasure being with you this evening.
Oh, thank you. Thank you. So with that, guys, thank you all for joining tonight. Again, continue to drop your questions in the chat. As you all know, we'll be back again next Tuesday. And I love you all to the moon and back, and I will see you soon. Bye-bye for now.